So when you bring the data in, you have to worry about two things. The first is protecting the data internally, making sure the right people internally have access, using it for the right purposes in the right way. So you need data provenance or data lineage. You need a full audit trail to know exactly what people are touching and how it's moving through the system. You then need to be able to make sure that you can go back and show that and make sure the right people are seeing the right data. You also have to make sure that the data is being put into the right locations. In Canberra in Australia, you can't take data out of that particular state. There are some similar regulations, like in Russia, they put in some regulations where data can't leave the country as well. We had a CDO in from a major FinServ a few months ago. We had exactly this discussion. How does she manage the estate? Because if you want to do a really amazing job at Customer 360, you need data from the cyber team. You need to see who's logging in where. You need the transaction data from the financial crime team. You need the Customer 360, KYC data and others, and you need to think across all of them. And you don't want it spread across different systems. If you look at data has mass. Gravity is not really the term. It has mass because if you have a petabyte of data on premise and you want to move it to the cloud, the fastest way is still for them to drive a truck into your data center, for you to copy it over a few days, for them to drive it back and load it that way. Because the bandwidth of doing petabytes of data over any network connection is going to be too expensive. So you have to think about those things in the infrastructure. So multi-cloud gets really interesting because there's two sort of angles from it. There's the customer angle in terms of the banks and the financial services companies, in that they are wanting to take full advantage of the cloud and the elasticity it provides. You've also got the regulators that are starting to look at the problem now from a different angle. So the regulators are looking at what's called the systemic risk of the cloud providers. So there's a distinct case where there's kind of over-concentration occurring. So the regulators in Europe are now starting to go to the financial organizations and saying, what workloads are you running on what cloud providers? Because they're worried that with that over-concentration, if one of those cloud providers goes down, they will basically have a massive impact on the financial system. So they're interested in the sort of systemic risk across all of them. And then if you look at security, every cloud provider has different levels of native security. So as you move workloads and into the cloud, it can take years. And some of our big financial customers who have large on-premise deployments of Cloudera have been trying to get the cloud deployments through, and it looks great in POC, and then they go to their cyber team or their security team internally, and it can literally take years to get through all the approvals, and they still may not all be through those approvals yet. So cloud offers a lot of opportunity, but it means that you have to not sacrifice anything along the way. And you also have to think carefully about the legality of using the cloud. Cloud means that data is moved between regions and other locations, so you may be subject to data locality rules. So when you load it into a cloud provider, you may not realize it, but that cloud provider may, for redundancy reasons, move data into a different region. If you do it as a choice, it can be very expensive to you, like multi-region, or the cost of moving between regions can be expensive, but you have to factor all these things in. In most of these banks, the teams are very separated. So you'll have a fraud team, an AML team, you'll have a cybersecurity team, you'll have a surveillance team, which have all grown up independently. And they don't share data, they don't share infrastructure. The opportunity there is to bring those together, have a single data layer that sits underneath everything. That data layer sits on a single technology platform, which Cloudera's data platform is ideal suited for that. Once you have that in a single data layer, you can do machine learning on top. Many of the most innovative things around financial crime and fraud are happening with machine learning and AI. You have core analytics, and the fact that you can bring all that data together and have that complete view means that a cost point view. So in most organizations, money laundering is something they just have to deal with. Fraud is something that has an immediate impact on their bottom line, but the same data you use to track fraud and financial crime can be used for cross-sell and upsell. My classic example there is, think about a credit card company. What used to happen with financial crime for them is someone would steal a credit card. They would go to a petrol station or a gas station. They would dip the card to see if it was still working. If the card was still working, they would immediately go to a store. They would try and find the smallest, highest value, most portable item they could buy. They would grab that item and leave. That's not what happens today. They get a whole bunch of credit card numbers off the internet. They hit that fake merchant ID with all the cards. They do a number of small transactions over a period of time and build it up. There's a really interesting model called synthetic identity fraud that we see a lot. The Federal Reserve wrote a really nice white paper on it. What they do is they create like a Frankenstein. So they take a couple of real bits of data, like a real social security number, a real birth date, and then they build up over time, over many years. They basically create these Frankensteins of real data with mini transactions. So they build up credit reporting on someone that doesn't really exist or is not actually banking. So in 2017, 1 million children had their identity stolen. We as adults often worry about our identity and we think about our credit reporting, etc. But it's kids and actually the elderly who, often don't have access to the internet and other things who are, they basically steal their IDs. They make them feel like real people. They link them to bank accounts. They build up their credit and then they hit them. They basically take all the money out. The criminals are really smart. They know that once they hit them, they hit the credit limit. What they do is they then phone up and they pretend to be that person. They've got all the information that they created about them. And they say, I'm the victim of fraud. All these transactions have appeared in my account. Please remove them. They get removed. They then hit the account again. So they double the amount of money they take out. It's really sophisticated. But the way that we have transformed the businesses today, banks are adding all these new digital channels, all these apps are actually making it easier for these criminals to take advantage. So we have to stay ahead of them. We have to have collaboration between the banks. Open banking is a really interesting model. Banks typically don't want to share customers. They are happy to share dead customers. It's a really interesting starting point, right? You don't want a dead customer opening a bank account or getting a credit report. So let's start with that information. But open banking has huge potential here. But the bigger picture is, can we really stop this? Because financial crime leads to terrorism, leads to human trafficking, has massive societal impacts. So, these things that we can help. And the great thing from the Cloudera side, the reason I love working here is, we can take the technology and we can apply it to problems and they have real impacts on human lives. So obviously it's great to help banks be more profitable and make more money. But the same thing you can do is you can reduce human trafficking, you can reduce, abuse and other things from these systems. So.